We've had a long hiatus from Berkshire Hathaway. They've got a lot of money sitting there waiting to be deployed. We're starting to get the deals coming through. Why HP? What does Berkshire Hathaway see here?
Well, first of all, I think the valuation of HP has gotten much better. Obviously, we've seen tech stocks in particular get pretty much hit at the start of this year through the Russia-Ukraine invasion. And I think valuations are way more attractive to Buffett. But I also think HP is kind of a classic Berkshire play, right? Yes, it's technology, but it's really consumer products. And it's shifted a lot into the consumer products that I think are going to obviously see increased demand. I mean, HP obviously is forecasting a pretty good market for PC sales over the next few years. And so I think that really plays into a company that Buffett likes, pretty, consumer focused, has a strong business, and is more attractive stock price-wise.
Should we be expecting more potential acquisitions or at least large stakes taken from Warren Buffett and Berkshire Hathaway? They have a lot of cash to work with.
Yeah, they have a near record $146 billion. That doesn't account for their recent Allegheny agreement purchase and their Occidental stock purchases. But I think it's true. I mean, we've seen Warren Buffett on the sidelines for a while now, and I think he's expressed some dismay about that he wasn't seeing anything attractive and that valuations were really kind of a hindrance for them. And so I think for him to be piling into Occidental stock, I think for Berkshire to be buying a huge stake in HP. I mean, obviously it's $4.2 billion, which isn't massive compared to like Berkshire's, $161 billion stake in Apple. But I do think it's big enough that, obviously it required a regulatory disclosure. It was over 10% of the company's stock. And I think it really signals that, they're on the hunt. They are willing to put some of this money to work. They just need to find the companies.
Catherine, what does this say about HP's business model? Is it an affirmation that management is doing the right thing? Obviously, we had the Xerox deal, which didn't happen. And I'm wondering whether or not this is further affirmation that there will be no Xerox deal or whether the possibility of a deal would be put back on the table. I'm just wondering whether this could be a potential roll-up deal as well.
Yes, well, I think obviously the fact that Berkshire took that big of a stake is a real sign that they're backing it in many ways. And while it's unclear whether that was Buffett or the investment managers, Todd Combs and Ted Weschler, I still think Buffett likes to get close to companies that they potentially also could do a deal with. He obviously wants to help, whether it's finance deals or do outright acquisitions on his own. He loves those opportunities. So I think, yes, if he's, increasing stake to this size, there could be more to come.
Hi, this is Cayden again from VIA Value Investing Academy. Just a couple of seconds ago, you would have watched a video, right, that showcased Bloomberg markets and financial news. And there is this lady who shared her opinion about why Buffett bought this company called HP, right? HP, yeah? Now, before I go into the actual slide proper, right, let's play a very small game. The video, I think it took about like 4 minutes to illustrate what the lady is trying to say. I think the game that we're going to play next is pretty simple, right? There are about 71 people watching this. Now, let's assume that each of you have $10,000 right now, $10,000 worth of cash right now. And my question to you is this: would you buy this company called HP? Yeah, would you buy this company called HP? So I just need your help to type in either yes or no inside the YouTube live chat. So very simple, right? If you have $10,000 right now, would you put this $10,000 into this company called HP just by listening to an expert from Bloomberg News? Okay, so I give you a couple of seconds, just type, and sometimes it takes a while for your reply to pop up on the video chat, right? Okay, so Edmund, right? Edmund, one of our grads, say no. Anybody else? It's just a yes or a no. $10,000. Would you put your $10,000 into HP? And then you just follow Buffett. CT Tan say no. Anybody else? Yeah. Nobody. No. Oh. Maybe. So Manfred say maybe. Eugene say no. Okay, good. So is it already overpriced? So Wendy asked a question. Hey, Wendy, you're always here, huh? Oh, Wendy, you're always here, right? You never left, right? Our YouTube live. I always see you. But your training is coming, right, in May? There are many names, but there's one name I recognize is you, right, Wendy Ting? No. Okay, so most of you say no. There may be one or two maybe and so on. Now, the interesting thing is when I ask this question, if you had $10,000, would you buy HP? And most of your replies say no. But the interesting phenomenon is if I play another video, maybe a YouTube influencer or some popular guy with 1 million followers, right? And if he talks about HP, and then within 5 minutes he say, oh, you're supposed to buy HP, you're supposed to buy stocks like Palantir or Tesla or whatsoever. The interesting thing is most of the people will say yes. Yeah. And I'm just going to give you a couple of seconds to just ponder it through, right? And the reason why I want to play this, Wendy say, yeah, I've been here since the last session. Yeah, she never left lah. She full-time YouTuber watcher. Okay, so let's come back to the part. Now, the interesting thing is, I think for the past 2 years, ever since the pandemic began, right? So I think there's a lot of people watching YouTube videos, trying to see whether are there any stock tips or not. And sometimes people will say, hey, if I ask you to buy this, right, please buy this. If I ask you to sell that, please sell that. And just by watching a 5 minutes video, people actually put hard-earned money. We're talking about 10K, 50K, 100K. And interestingly, when I play this video, when I ask you whether would you put your money inside HP, your answer is no. It's pretty interesting. So-called expert from Bloomberg, you say no. And the YouTuber, right, who is from nowhere, and then you say yes. Okay? Now, but putting this aside, and the reason why I want to ask a question is, it's quite dangerous for all of us to put our hard-earned money into something, right, that we don't understand, but based on something that people have said. So this is quite dangerous. So for example, if you want to buy a laptop, I'm quite sure you do a lot of homework, what laptop to buy, where to buy, the specs and so on. But when people buy stocks, it's quite easy, right? Maybe one day they were sitting in their hair salon and so on, and then the hairdresser, right, say, hey, oh, there's this stock that I know, which is called High Flux. And the next thing you know is you quickly rush back home and then put 10K in High Flux. Yeah, so this is quite dangerous. So the intention for our deep dive series for tonight and for the past many months, right, is really to share with you a framework for any one of us to know what to do before we put in our hard-earned money. Yeah, so that is the primary intention. So remember, right, everybody want to get rich quick, but it's not so easy, right? It's not so easy, So let's come back to the question, right? Will you buy HP after watching the previous video? And most of you say no. Yeah, but let's look at what Warren Buffett, which is the Oracle of Omaha, did to this company. Now, if you look at the slides over here, you see a couple of information, right? Just to let you know that a Warren Buffett of Berkshire actually bought HP, right? HP in the second quarter 2022. Some basic information about the transaction, about the deal, right? That was the very first time that Buffett of Berkshire bought this company. Yeah, bought this company, right? And the average purchase price is about $34.91. And if you want to know, you can cross-check what's the share price right now, right? And the last time I checked the share price, which is this afternoon, the share price is 37. So ever since Buffett bought the stock, the share price went up just a little bit by 8%. 8%, right? And remember, it's a new holding, and he bought this amount of shares. Now, when you look at this amount, it appears to be like a very big deal, right? But we must understand that the total impact is only 1%. 1%, which means that if $100, right, or Buffett has $100, he just put like $1.26 into HP. So it's not really a lot as compared to his overall portfolio. So take it easy, right? Take it easy. Don't sell a house and then put your money in HP. So take it easy. His is only 1.26%. Yeah. So take note. This is a very important information. 1.26%. Now, so now the question is, why did Buffett do it? Yeah, Buffett didn't really explicitly say why he buy HP, but we are trying to gather information from here and there and then see whether does all this information make sense. Now, what I'm going to show you next is actually an opinion. So remember, we have to be very careful to distinguish between fact and opinion. Yeah, fact, opinion, right? So this article is published on the 8th of April 2022. And remember, article is an opinion, right? It's not a fact. So here, this author, right, attempts to explain, hey, this is my opinion. Here's why Warren Buffett bought the stock. So his opinion is HP, right? Now, by the way, HP has two companies. We're talking about the one that sells PCs, right? PC, So the ticker symbol is HPQ. Yeah, so his opinion, not fact, right? His opinion is he said that, oh, HPQ, right, generates a steady stream of free cash flow. Now, so what is free cash flow. So let's say I'm HP, I sell laptop, right? So whenever I sell laptop, cash come in. So when the cash come in, lots of cash come in, right? And I take this cash, which is known as cash flow from operation or operating cash flow, and I invest in some other things. Yeah, maybe I invest in setting up a plant to manufacture PC or whatsoever, right? So once I take this cash flow, I invest in some manufacturing plant, and then there are still some cash left that is freely available for the company to use. And that cash that is freely available is called free cash flow. In short, the more the merrier. The more the merrier, right? So this guy, Dan is trying to explain, hey, HP has a lot of free cash flow. And free cash flow is important, right? It's because only when there is cash flow, then it can be distributed as dividend, right? No cash flow, no dividend. And here you say, oh, it's no secret that Buffett adores dividend. Now, be very careful. This is an opinion. This is an opinion, right? Now, if you look at the facts, now the dividend yield of HP is actually not so fantastic. Now, the percentage is 2.34%. Now, just to let you know that an average dividend yield of a typical stock is about 3%. About 3%, right? And since the dividend yield is 2.34%, is slightly below the average, below average, right? Now, which also means that if you invest in HP, the dividend yield is slightly below the average, which also implies that if the dividend is not so fantastic, right, you want some form of capital appreciation. Otherwise, you don't really want to invest in this company. Now, so let's look at another ratio called payout ratio. Now, it's a bit technical, but let me put it simply, right? Payout ratio 15%, what does it mean? It simply means that for every $100 of profits that HP make, it gives out $15 to the shareholders. Now, just to let you know that payout ratio of 15 is really not a lot because the typical range is about 20 to 30%. So in other words, they are not giving a lot of their profits back to the shareholder. Yeah, so that makes me wonder why Buffett bought this in the first place. Okay, so that's one part, right? Now, let me share with you more information. This is another article, remember, it's an opinion, right, by this guy called Peter. Peter say, oh, 4 reasons why buying HP is a bad idea. Just now was a good idea, right? Then a separate opinion is a bad idea. But why, right? Now, in this article, it says that, Buffett like to buy companies with a certain characteristic. And these are some of the characteristics. Now, I'm not going to read out all, but you can read it for yourself. And this author's, Peter's opinion is, but the reason why he bought HP seems to contradict what Buffett wants. For example, right, a HP product actually is a commodity. There's nothing special. Yeah, it's nothing special, right? And then there is no addictive need. In other words, if I buy a laptop, I don't have this inclination, right, that I need to buy a HP laptop. Yeah, because if I go Challenger, there are tons of laptop. So far, when I go to HP, I have not come across anyone who walked in and demanded a HP laptop. Okay, don't have. So there is no appeal, right? So there's no appeal, there is no Moat. Yeah. And then Buffett don't use computer, you know what I mean? So he never even have a computer, then he buy a computer company. That makes me wonder, right? Yeah. But again, here are some other arguments, why Buffett buys stocks and so on. So you can see, right, because his opinion is not a fact, there are 2 sides to the coin. Yep. Some people say, oh, this is what Buffett buys, and then the other side say Buffett made a mistake, but only time will tell. But let us, right, give you some facts and share with you some opinion, right? Then you see whether if Buffett bought this so-called tech stock, which is actually not really a tech stock, it's more like a consumer electronic stocks. Should you also buy HP, right? Now, I think the lucky thing is he bought Hewlett-Packard and he didn't buy companies like Palantir or whatever, which is more difficult to explain. So let's look at Hewlett-Packard. I think most of you will know what Hewlett-Packard does, right? But before we deep dive into the actual content, Wendy say what? Wendy say, alamak, my eyesight can't see the figures. You see lah? You must get what do you call it? Reading glass. Okay, Now this is a whole chunk information. You have seen this like maybe 1 million at one time, right? So what I'm going to do is I'm going to jump straight to some paragraph, which is more important, right? Just to let you know that in no event shall VIA or me and my counterpart, Hillary, be liable to any viewers, guests, or third party for any damages of any kind lah. When we are talking about HP, and this whole chunk information, right? So remember, Neither my company, My Kinesis Investments Private Limited, VIA, right, nor the authors of this case study, which is two of us, are operator affiliated with any broker, dealer, or licensed financial advisor. So remember, right, here we're not giving a stock tip, like in short. We will say things like, I buy, you must buy. I tell you to buy, you must buy. Yeah, so we are very careful about words. So remember, neither VIA nor the authors makes any representation or warranty as to the completeness or accuracy of the information in the case study. So remember, our objective is just to share with you the HP, right, in the context of value investing and how we can investigate, right, or the framework or the process to analyze a company so that in the long run, maybe on your own you know what to do. So this is a disclaimer. So let's get started. So let's talk about what's HP. Now this is quite simple, right? It's a simple business. Now HP is a global provider. It's not a Singapore provider, but it's a global provider of personal computing, imaging, printing products. Don't worry, later I'll show you some pictures, right? So their target audience are people like me and you, which are individuals. It can be SMEs, businesses, right? It can be big MNCs. Yeah. So they sell these three things, but these are the people that they sell to. So what I did yesterday was I went to the HP website and I wanted to understand what do they sell, right? So if you see here, you can see they are selling desktop as well as laptop. And their target audience is for me and you, home, gaming, business. And these are some of the brand name. Some brand name, right? Now the PC that I'm using right now, coincidentally, is HP, right? And the model is actually Pavilion. Yeah, right now it's quite difficult to buy Pavilion because it's their old model. Okay. Then they also, you see how when you use computer, right? You want their accessories. And what accessories are printers? You buy printer, it must come with the ink, right? And remember, they don't really make money from the printer, but they make money from the refillable ink or toners. So you can see, and this one, right, is targeting home businesses. Yeah, because when you play game, you don't print, right? You don't print now. Now, then the next one, of course, are computer monitors. Computer monitors. So again, monitors, big, small. You can use for home gaming, businesses. Some people do trading, right? They have a couple of monitors. And the interesting part is I wanted to understand these accessories. I mean, what sort of accessories that HP sell, right? Then I realized that HP also got mouse, gaming bags, all this. Yeah, VR cables and docks. But I'm just curious. Why I walk inside Challenger and then I demand a HP speaker or a HP mouse? Yeah, so I'm really curious. It appears like a commodity, right? Yeah, but interestingly, Buffett, it falls inside Buffett's radar. Yeah, so this is what HP does. But the most interesting fact is HP is the world's second largest PC vendor, right, by unit sale. Yeah, after Lenovo. Right? This is quite interesting. Now, if you look at all these vendors over here, there are 5. 1, 2, and then 3, and then 4. There are 5. And HP is the second largest. This is something quite interesting. And the market share is about 1/5. 1/5. So you realize that there are a few major players. You can see, right? Lenovo, major player, this is about a quarter, right? This is about 1/5. And others, others don't count because others, there are a lot of the palang thing, right? Dell also take out a very huge chunk. And Apple, being a brand, it takes out about only 8.5%. So in summary, HP appears to be it is the second largest PC vendor. So take note of this. Now, and in the next couple of seconds, I'm just going to share with you the quick evolution, right, of Hewlett-Packard. Now, if you are a business school student, you would know that HP, Hewlett-Packard, right, are actually the name of the two founders. Yeah, which is the surname. Yeah, so Hewlett, right, and then Packard. So Hewlett-Packard. And this is the interesting because this is the garage, and this is how they started the company, and way back in 1939. So I'll just quickly, put it through. I will not read. 1939, something happens. 1942, World War II. They manufacture electronic products. Very interesting. IPO at $16. As of today, you will have made about 130%. I'm not very sure. Are there any stock split in between, right? And then they start with the home PC and so on. But the interesting thing is I want to show you the pictures of the earlier version of calculators and PC. Okay, this is remember, this is a scientific calculator, right? During my school days, I used the Casio one. Yeah, imagine I go to high school, I carry this. Oh, this one become like a weapon, right? Yeah, nuclear missile detonator. Yeah, so of course, as time passes from 1960 to 72, the thing shrinks in size. Shrinks in size, right? Become this. Because right now, this one extinct already. Only Popular still selling. Okay. Now, well, this is interesting, right? This is the first PC. It has a display which is so small, right? So small, this is very cute, huh? It has a keyboard as a printer. Now, this one is a printer. This one is a printer. This one is a printer. This one is like you go restaurant, you swipe, right? And then the thing comes up. So, but it's quite cute, right? It's 3-in-1. 3-in-1. This is really interesting. Then after that evolved into the first laser jet. Laser jet. If you use a laser jet, the earlier version of printer, usually it makes a lot of noise. And so on, right? Yeah. Then subsequently, of course, things become more advanced. Yeah. Oh, then just to let you know that HP actually acquired Compaq. I think right now, if I go to Challenger, I don't think I've seen any brand called Compaq anymore. Yeah, I think no more. Yeah. After acquired, they, that's it. They vanished, right? But the most interesting thing is in 2015, this HP, right, was split. Yeah, one single company was split into two, right? Now, so one is called HP Inc. Yeah, so in other words, the ticker symbol here is actually HPQ. Be very careful, right? Because HP right now, there are two HP. Yeah, one is a HP Inc. Ticker symbol HPQ. Q. And the other one is a HPE. You see, there's an enterprise, right? So be very careful. So for tonight, right, we are talking about HPQ. That's the company that Buffett bought. Buffett didn't buy this HPE. Okay. So in summary, in the next slide, there are two aspects. One is the left, which is the HPE. This one, very B2B, very business to business. We're talking about server, storage, and so on. And luckily, we are talking about the right side, which is much more easier to understand, which is the HPQ. Okay, personal PC. So remember HPQ, right? Now, so at 2015, when branches off to two companies, let's put the HPE aside, right? And let's focus on HPQ. Yeah. So remember, for this HPQ, they focus predominantly on business to consumers like us, gaming, as well as small businesses. The big one is all taken care by the enterprise. So of course, for gaming, they launch different products, the printers, and then this one very interesting, right? Xerox attempted to acquire HP, but it was called off. Some history lah. And then eventually acquired Kingston Gaming. Yeah. Now, if you're a gamer, you will know all this. Now, I'm not very familiar. Right? Okay, so a quick recap about the products. Remember, in terms of PC, there's for commercial, for consumers, as well as for gaming. A quick recap. So that is personal PC. Now, another one is printing. Printing, of course, you have very huge printers, and you have those very small home printers. This one is really like commercial printers. Like, for example, you want to do wall sticker, right? Wall sticker. You can actually print this. So you need to go to some specialized shop where you witness the huge gigantic printers where they print all this stuff for small business owners. 3D printing is quite interesting. This is something up and coming, right? So printing solution, PC printing solution. And here, right, this is a bit generic. Application of a product to solve a specific need or business problem. This is highly, how should I say, highly generic. So in short, let's say you start a company, right? Let's say you start a company and then you have 20 staff, and then none of your staff has any PC. So what you want, you may search for HP, and then some of their staff is going to come down. They may identify what are the things you need. Oh, you need PC, but the specs and so on. So they may come down, gather some information, and eventually supply you with the necessary desktop workstation or laptop. And of course, when they provide you with this, maybe they also want to cross-sell you, right, with some maintenance. Maybe you want to do data migration, all that stuff. So all these things as a whole, very generically, is actually providing business solution on top of the hardware that they are selling. Then later, Hillary will share with you a graph. Now, and of course, the application of this so-called business solution can be in any industry. So this is what HP do, right? And the next part, I'm going to hand over to Hillary, and Hillary is going to talk about, hey, these are the things that HP is selling. But for each segment, you know how many percent, in other words, which segment allows HP to make most money from. So I'm going to hand over to Hillary, and she's going to deep dive into the numbers, right, so that we can be very specific. Okay, so Hillary, over to you.
Hi, good evening, everyone. So I'm back here. My name is Hillary. So right now I'll be sharing with you how HP generate revenue from their businesses. So first off, we'll see there are actually 3 business segments that they have. So the first one is called a personal system. So when they call personal system, it's actually referring to their PC businesses. So under the personal system, they have actually 4 business units to report this business performance. So what are the 4 business units? We will share in the later slides. And then the next one will be printing. So it inclusive of the printer hardwares, the supplies, and also the services and solutions, the printing solutions. And for this one, they have 3 business units for reporting their business performance. And next up is the corporate investment. So this one is actually a very interesting business segment because this one is more on the R&D for new technology, but it's not directly involved in the monetization. So it's purely just for HP to innovate, to think of some new technologies, like for example, the 3D printing, which is quite a new technology, which when I was doing the research, I was a bit surprised to see that they're actually doing 3D printing. Yeah. So next, we will see how they actually generate revenue. So earlier on, we shared that there are 2 business segments that's generating the revenue in 2021. So in 2021, they generated about 63.5 billion. And among these 63.5 billion, 68% belongs to the personal systems, which are from the PC business, and 32% is from the printing business. So next up, we'll see by region. So they separate into 3 different regions. The first region is America, which is the North Americas and South Americas. It takes up about 43%. Then EMEA is actually Europe, Middle East, and Africa region. So this one takes up about 35%. And then next up, APJ is Asia Pacific and Japan. That means the rest of the Asia area. So this one takes up about 22%. So from here, we can see that about half of the HP business is actually coming from the Americas region. So now we'll see into personal system. Earlier on, I've shared that they have 4 business units. So the first one is notebooks, desktops, workstations, and others. So what's the difference between a desktop and a workstation? So desktop is like normal day-to-day use, but workstations is more for high-end usage, like those scientifics, those that require better performance. Those are called workstations. And we can see that other, what is other? And also you can see the small word is like DAAS, what is that? So earlier on, Cayden shared about the services that HP provided. So it's actually referring to this one. So this is an example of the business solutions that HP provided. So this one, it means that it's a complete solution for the device life cycle. So from the time that you purchase, then they optimize what are the specific needs that the person wants, and then they help you dispose it when the PC is no longer working. So we have a quick run through, like what is it really about. So first off, HP will try to help the clients to determine what are their specific IT needs. Then next up, they will try to help to assist to set up the system, like they will try to help them to set up, do some data migration to make sure that the PC is running, and then further optimize after it has been set up according to the customer needs, like different business solutions. And then third will be easy access to repair, because when we're using computers, suddenly like when the PC is having some issues, we always have to find someone to go for repair, but you can just call HP for help, and then they will have someone to come down to help you, or maybe over telephone or maybe email to guide you to how to do some simple repair so that it will minimize the downtime of the PC. And then next up is to help to dispose and retire old devices, because like whenever 3 to 4 years later, the PC is no longer working fine, or maybe because of company policy to change PCs, what are you going to do about the old PCs? How are you going to dispose it? So this one, HP will help the clients to dispose these old devices. So in all in all, the device as a service just means that when you purchase a PC, the HP will help you to take care overall how PC works. Okay, so even though earlier on we explained about the device as a service, we see that actually the huge chunk of revenue in personal system is actually coming from notebooks and desktops. So the other, which is device as a service, is actually a small part of the revenue, but it's a good add-on for, especially for enterprises, because they have like 500, 1,000 employees. Like even 10% of employees is having problem with the PC, is going to cause a lot of trouble for the IT department. So with the DAAS, it actually helps the IT departments to simplify their workload. Yeah. And then next off, we see printing. So printing has 3 business units. First one is commercial printers, consumer printers, and also supplies. Yeah. So when we see on the pie chart, we notice that 62.7% of the revenue is actually generated from supplies. So when HP sell off the printer hardwares, then the most revenue generating part is actually from the inks and toners, which is the supplies. Okay, so next time we'll see some exciting thing about HP, about the future plan. Because earlier on when Cayden was sharing, it's just only like selling PCs and printers. So what attracts Buffett to buy this HP? Then we'll look into the future to see what are their plans. So for their long-term growth strategies, they say that they intend to build a stronger core and also have more cash flow, and also to grow a more growth-oriented portfolio, and also to optimize the business to drive long-term value. So what does this actually mean? Then now we will see how they actually intend to grow the company based on all these expectations. So first off is advance. So they intend to strengthen their value proposition, which is they intend to expand of their product portfolio, which is the PC and the printer. And then they're expanding into adjacency. So what is adjacency? Adjacency is actually referring to those accessories like the headphones, the mouse, the keyboards. So you can see from the diagram, it's actually HyperX. So by acquiring this company, they are actually able to provide more products, more accessories for the gamers, for gaming. And also another thing is about driving innovation. So now we'll see in detail what does it really mean. Okay, so in 2022, HP actually announced that they will acquire Poly. So Poly is actually a company that sells those headsets, the conference gear, like those earpiece. If you know Plantronics, actually Plantronics is under Poly, yeah. So for this is actually for the hybrid, because they anticipate company will become more hybrid work. So what is hybrid work? Hybrid work is actually a flexible model where the employees can work in office, on the go, or remotely, as long as the employer allows it. So HP is actually anticipating the future of the workforce will be more in a hybrid mode compared to only purely in the office. So when it's a hybrid mode, people will tend to have meeting via Zoom conferencing, like what we do during COVID period. Okay. And then another thing that HP announces is that they are launching a smartest printing system. So what does it actually mean? It actually means that you're using an app with a cloud-based ecosystem, so that the workers can print from anywhere that they want. So first thing is the smart printer, which is they're connected to the cloud, like for example, Google Drive, OneDrive, or maybe that's Dropbox. So from there, then they can print. Because last time when we need to print something, we need to have our computer connected to the PC, to the printer via cable or maybe via certain Wi-Fi connections. Only then we can print. But right now, most of workers, they tend to use smartphones a lot more. So it will be a bit troublesome to transfer certain files from the smartphone to the PC. But instead, they can use their smartphone directly print the documents they need from the printer. And then Smart Ink in subscription, this one I will share in the later slide. And then Smart App, which is on their phone, so that they can print from anywhere with their mobile devices. And also Smart for Planet. It's because we know that ink cartridges, they are actually consumable. So once you use finished, the cartridge is actually it's already rubbish. So you either throw it away or maybe find some way to dispose it. But right now, HP comes out a way to recycle these ink cartridges so that it can be reused, and it's also better for the planet. So earlier on when I said about ink subscription, so ink subscription is actually referring to this. That means whenever the printer detects that the ink level is decreasing to the low level, then HP will send out the ink to the owners for them to replace it. So the owners no longer has to run off to any shops just to buy the ink. So it's very convenient for them, especially for those home businesses owners. Yeah, so even though this one looks like a new technology, actually HP is working on for a backward compatibility. Backdated compatibility means that any printers that printed this year, 2022, has this special feature. But what about PCs before 2022? Like for example, 2020, 2019, how about those printers? Are they eligible for this Smart Ink subscription? So right now, HP is working on to allow all these backdated old printers to have this subscription offer. Yeah, so they will only ship out. They don't simply like, it's not like a monthly thing ship out. It's only when the ink level is low, only then they will ship out. Okay, so the next pillar is actually disrupt. So what is actually disrupt about? So here says that it's investing in disruptive categories, unlocking opportunity, capturing new sources of value. Okay, but what does it really mean? So now here, they actually lay out a growth plans as hybrid office will have more need for PC, because they are anticipating that in the future, everyone will have a PC, and then even though they have PC, they may also need to have a printing services to print out the documents and also use 3D printers. So what does it actually mean? So for PC, they anticipate for the hybrid work, that means work between home and office. And if the workers are working between home and office, imagine that the PC is having some issue. If it's within the office, it's easy. You just bring it to the IT departments. If the office has an IT department, then the IT personnel will help you to solve it. But if, let's say, the worker is remote, is always on the go, rarely comes into office, but the PC is having problem, it's very troublesome for them just to travel back to office to solve this PC issue. So that's why HP comes up with a device as a service for the enterprises. And then the next thing is printing subscription. So they are trying to make the printing business to become more in a subscription basis. So imagine when you sell off the printer hardware, then it's just a one-off thing. The keep on revenue generating is actually the ink toner. So by making it into a smart ink subscription, so whenever the ink level is low, then they will send the ink to them. So it's kind of like repeating revenue is being generated. So it's a subscription based. And then another thing is 3D printers. So for this 3D printer, HP is actually looking into sustainable packaging and also wellness and footwear industry. So you can see they are intending to disrupt this industry by using 3D printers. So first off, we see that first thing is to create a prosthetic device for the handicapped personnel. And interestingly, they are also working with 𝗛𝗲𝗄𝗋, a car from France, that they are using the 3D printers to print out the car accessories, like for example, the sunglass holders, a can holder, or maybe some phone holders, just using the HP 3D printers. And then the next one is transform. So in short, what this actually means is that HP, we know that HP is from a 1939 company, but now it's slowly moving towards becoming more digital. So they're investing more into the software and data science to monitor about their supply chain. And with this data, they also share with their channel partners to make sure that they can work hand in hand and then provide a better business for their consumers as well. Okay, so next up, we will look at the moats that HP has, even though there's article says that HP has no moat at all. Okay, and also we also look at some of the competitors that HP has. So economic moat, I would say that HP will still have some economic moats, but it's very generic one. So first off is patent and intellectual properties. So as of October 31st, 2021, they have about 28,000 patents. And then distribution network. So whenever you want to purchase a PC, like let's say for a HP brand, you can easily go to any retail outlets or distributors and they say, okay, I want to purchase a PC, maybe HP, or you can also directly buy from their websites. And especially in Singapore, like let's say when you buy today, then tomorrow they can send it to your doorstep. And then another thing is that they try to make this HP ink cartridges to use original ink. So how do they protect it? Is by using a software update. So how does a software update work is whenever the printer has any software updates, then they will try to like encourage the users to use the original ink cartridges. And also on the ink cartridges, they actually have a smart chip so that the printer can recognize that this ink cartridges is original, not a counterfeit one. And also they try to prevent people from using illegal counterfeit, which might damage the printers. And also switching cost, this one is a bit, I will see it's like a potential one in the future, but whether does it works out, we are not sure. So this is what I see is device as a service. So imagine that for large enterprises, they will want to have a vendor to help them to manage their IT devices. So if let's say HP stepped up to provide these business solutions to the large enterprises, but then the large enterprises feels that HP is no good, then they wanted to change. So imagine the large enterprise has about 500 or maybe thousands of employees, and all of them has to change the computer devices. There's a lot of data migration need to be done. So this is one of the potential modes that I can see, but whether does it works out, no one knows. And also, when you see HP brand, what comes to your mind in the first place? Like for example, there's a lot of PCs, but when you see HP brand, what do you think of? Apple is more like very innovative, and also like there's certain appeal for Apple, or maybe Lenovo. There's also certain branding appeal attached to Lenovo. But for HP, my first impression is like reliable and durable. But then I've also read up some feedbacks from other users. It's like some of them, they're having some issues with HP product, especially for the printer part. Computer part, for me, I personally have been using HP computers, like about 3 computers, but so far there's not much problem. So touch wood, I hope that this one does not have any problem. But whether is it really reliable, durable, we are not sure. But so that's why I put in a question mark. But all in all, last time when people say HP, they will say it's a reliable and durable product. But right now, I'll put a question mark. Okay, so now next up, we'll see competition because HP, they are in PC segments and also in printer segments. So we will see 2 different competitors for this part. So first off, these are the brand names that I will compare with because earlier on when Cayden was sharing about the market share, we see that there's actually a few. So these are the few that I picked out. So these are the product range that they provided. So all of them, they are providing PCs and also certain accessories. And surprisingly, it's only HP, Lenovo, and Dell. They are actually providing certain business solutions to their customers. And Acer and Apple, they are just purely selling PCs. And next up, Lenovo has the largest market share compared to all 5 PC manufacturers, followed up by HP. Then next, we will look at printers. So when I was doing this, I was a bit surprised because for printers, most of the competitors are actually coming from Japan, like Canon, Brother, Epson, and Xerox. And also another thing very interesting about these few companies is about the product that they provided. So all of them, they provide printers and supplies, like the ink, toners. But then you can see that other than that, Canon, they also sell cameras. Then Brother, they sell sewing machines, embroidery machines. And Epson, they are actually producing industrial robots. So it's only Xerox and HP, they are also providing 3D printings. Yeah, so this is quite interesting for me. And then for market share wise, HP is actually has the largest market share for printer segment. Okay, so next time we will look at the revenue. So for revenue, we see that in 2014, from 2013 to 2014, there was a huge drop. That is because in 2014, HP actually announced for the split between HPQ and HPE. So the huge drop was because this revenue is actually taking only from the printer and the PC division. So the HPE, that means the networking, the cloud, and also the storage businesses, it was not included here. But then HP only officially split their business in 2015. So from 2014 and 2015, when you see their annual report, their assets and liabilities actually still consist of HPQ and HPE. It's only from it's only from 2016 onwards, then they only report the assets and liabilities solely for HPQ. So we see from the graph, and we noticed that in 2020 there was a drop. That was because it was the start of the COVID-19 pandemic. So there was actually a drop in the desktop, the commercial printer, and also supply sale. But surprisingly, the notebook sale was actually increasing during that time as well. So all in all, we can see that actually the revenue graph is actually increasing, even though it's like kind of a bit flat, but you can see that it's still increasing. So I will give it a pass. Then next up for net income. So the definition for net income is all of the revenue after you deduct the expenses, inclusive of the income taxes, is the profit and loss that the company makes. So we can see that in 2018, there was a huge jump in the net income. So when we investigate inside the annual report, we noticed that actually in 2018, there was a tax rebate. So that's why they have a sharp increment in the net income. But if let's say we take out the tax rebate, how does the net income actually looks like? So it actually looks like something like this, okay? And then next up, here actually is a high shoot up. Then people will say, because COVID-19, people work from home, there's a lot of PC being sold. But when we really further investigate, this one is actually a one-time litigation proceed from Oracle. That is because Oracle stopped providing HP business, the services. Then HP sued Oracle for it, and they managed to win the litigation. So this one, part of it is actually a one-time proceed from Oracle. So when we deduct off that proceed, it's actually something like this. But all in all, and then we see that when we see at the new chart, we see that actually 2020, it has a drop. It's because in 2020, earlier in the previous slide in revenue, there was a drop in revenue. So that's why it also affected the net income. There's a drop here. But all in all, it's still an increasing trend. So this one is also considered quite okay. And then next up, we look at earnings per share. So earnings per share is actually referring to net income divided by outstanding shares. So what does this actually mean? It means that for every share that the investor purchased, the company, how much of the profit can the company generate? Like for example, if the EPS is 5, like based on this chart on 2021 is 5.33. So that means that for every share that the company, for every share that the investor purchased, the company managed to generate $5.33 of income, net income. Then we see that when the net income increases, the earning per share also increases. So in 2018 and so 2021, earlier on we see that the net income, there was a sharp spike. But if we remove these 2 points, it actually looks something like this. But all in all, when we look at the new graph, the trend is also still increasing. So this one is also okay. And then next up, we also look at the free cash flow. So earlier on, Cayden has actually explained what free cash flow is. So it's the cash flow that the company has after deducting the capital expenditure. So capital expenditure is actually referring to the expenses to purchase the assets that will be used more than 12 months. And operating cash flow is actually the cash flow generated from the normal business activities. So we see that in 2020, there was a drop because earlier on, we have established that there was a drop in revenue and also net income. So when there's a drop in revenue, of course, the cash flow that comes from the business activities will also decrease. So that's why 2020 there's a drop there. But when we look at the chart, it's actually still increasing. So this one is also okay. Next, we also look at their balance sheet because we wanted to know what does HP owns and also what does HP owes. So this is the formula for the balance sheet. And then what we are interested to know is actually the shareholder equity. So what does shareholder equity made up of? Okay, imagine that when a person wants to start up the business, what does the person needs to invest in the first place? First thing is the capital. So once the business is running for a few years, there will be some profit that has been generated. So imagine that the profit still retained within the business, does not take out. This one will become retained earnings. And also some companies, when they are giving out dividend, is actually from this retained earnings. So when the company is more profitable, there will be more retained earnings, and then they can provide more dividends. Okay, so now we will see that actually from 2016 onwards, HPQ actually has a negative equity. So people will tend to see why is it negative? So equity is actually coming from either capital or retained earnings. But since capital is being invested by the business owners, so it's unlikely for this one to be negative. So most likely it's from the retained earnings. And when we look into it, it is indeed from retained earnings. So why does the retained earnings become red from 2015 to 2016? So now we will have to look into the annual report. It's because in 2016 onwards, there was a split between HPQ and HPE. So you can see that from 2016 onwards, there was a separation cost for HPE, and also they also pay out some dividends, which leads to a negative shareholders' equity. Okay, so since we know that equity is already negative, we wanted to know how much debt does HPQ takes on. So usually we prefer to use debt over equity ratio, but because equity is already negative, so that ratio does not really work for our case. So another leverage ratio that we will be using here is actually debt over asset. So when I was trying to find out more about what does this actually means, it actually means that how much debt does the company takes on in order to finance their assets and also grow the company. So based on value investing methodology, as long as the debt over asset ratio is less than 0.5, the company is still doing okay. So from here, from the chart, we can see that HPQ since 2016 onwards, the debt over asset ratio is actually below 0.5. So far, so good. But then how does HPQ actually compare between other companies? Next, we will look at industry and also sector. So what is the difference between industry and sector? So we can see from this diagram, sector is a big piece, and then within the big piece, the industry is within it. So in a simpler term is that industry is referring to a specific group of a company or maybe businesses, whereas the sector is a larger segment of the economy. So maybe a much more simpler explanation will be sector will be like financial sector. And then within financial sector, we can take like, let's say, for example, fintech as the industry, something like that, okay? So for the debt over asset ratio, we can see from the industry chart, 0.5. Anything from my left is considered okay. Anything from my right is considered not okay. It's because the company has taken on very high debt. So when we look at HPQ, it's actually in between the okay part, which is about 0.2. Then when we see how does HPQ compete in the sector, again, on my left is okay, on my right is not okay. So HPQ is still within in the middle of the okay part. Okay, next we also look at return on asset. So for return on asset, this is the definition. So that means it's net income divided by total asset times 100%. So what does it actually mean? Based on value investing methodology, it says that as long as ROA is more than 7%, the company is doing okay. It means that for every $100 of the asset, the company is able to generate $7 of income from their asset. So we see that since 2016 and 2017 onwards, HPQ has actually performing quite well for their ROA, which is above 7%. So this one is also considered okay. Okay, so now we have looked at the numbers, the nitty-gritty part. We wanted to know like what are the potential risks should we invest our money into this company. So first off, the sales will slow down. Even though earlier on during the YouTube video where the analyst says that HP is anticipating the sales will keep on growing, but one thing is that after COVID-19 measure has been relaxed, more people will tend to go back to office. So they will be no longer working from home, so they will be using their IT devices from their office. Unless, since we have not been in the office for the past 2 years, if let's say the desktops needs upgrade, yes, maybe the sales will come back up. But if the computers are still working fine, maybe the company might not see the need to change the computer. And also, there's not really a really exclusive mode. As you can see earlier on, the mode that I share with you is quite generic, like other competitors may have as well. and also it does not really have an addicting appeal. So HP will have a very stiff competition with other manufacturers. And like for example, I'll just give an example, like Apple, when it launches any new product, like for example, Apple 13, we will see people will queue long until like a few streets away just to buy the first hand of Apple 13. But for PC, I will not consider to change my PC unless my computer is no longer functioning or is already hanged. Then I will consider to change my PC. And even though if I change my PC, there's too many brands for me to choose from. Of course, I will choose the brand that has the best feature that I want. So this is one of the things that one has to be take note of. And also, consumer avoid using HP printer, because earlier on when I said, when you see HP brand, what do you think of? Some people may say reliable and also durable, but this one is quite surprising. It's because actually the original ink cartridges are quite expensive. So one of the workaround way that people do is that they are using remanufactured ink cartridges. That means the cartridge that has been finished using, then they refill it to reuse it. Those type of ink cartridges, or maybe they even consider purchase some third-party ink cartridges just to use the printer. And then whenever there was a software updates, they can no longer use these third-party ink cartridges, and the consumers are very unhappy, and they say that they are being forced to use the original ink cartridges, and they say that the printer is not good. And in the end, they might say that I don't want to use this printer, I will want to change another printer, and then in the end, HP might lose out the sale. So that's it. Okay. Then now we come to the conclusion. So first off, HP is one of the largest printer, but the second largest PC manufacturer. And also, they actually have their own R&D team to keep on innovating new technologies. And they are making some strategic acquisitions and also develop some innovations for future growth-oriented portfolios. But the cons are, they are having actually quite a stiff competition with other PC manufacturers because consumer has a lot of choices to choose from. And also, there's no addictive need to buy a PC. Whenever HP launch a new computer, there's no need for me to always keep on upgrading my PC to the latest model. And also, there's a high cost to use our original ink cartridges, and also the consumer will feel restricted that they don't have a choice to use other third-party cartridges. Is also something that they might consider to change to another brand. Yeah. So this is my last slide, and that's all for me today. So I hope that I've shared some of the insights about HP tonight. So thank you.
Hi, welcome back. Before I start, there's quite a number of excuse me, right? Exchanges within the YouTube live chat. So you can see, like for example, Jason shared about his experience. C Tan, right? He shared about his experience. The most recent one, Jason was saying, has been using a HP laser printer since 2014. So that's about 8 years. Their print count is pretty high, but the build quality is getting poorer. Powder gets out of cartridge. So I think before we even talk about the annual report, when I scroll through the chat, it doesn't give me the feeling that like HP is outstanding. Yes, as far as this 156 plus people is concerned. So I think this is a very small sample size, right? So that's one. And then if you look at the slide over here, right? Yeah, slide over here. Just now, Hillary talked about this, which is quite interesting, right? Whenever Apple launch a product, people queue overnight, Yeah. So far, I have not seen anyone who queue overnight for a HP laptop. Don't have. Yeah, but maybe the HP queue overnight for the customer. So I find quite hard to register this. Yeah, register, right? Yeah, so lame, right? You queue up for HP. I mean, can you imagine? I upload on Facebook one photo, like queuing up overnight. So my friend asked me, you queue up for what? HP laptop. Wow, I find it so lame, like HP laptop. Nike shoes maybe, Nike shoes maybe, and then Apple, yeah, I think it makes sense. Yeah, then of course, recently there's this Omega and Swatch, right? Yeah, so I won't queue up for that, but there's some people who queue up for that. So maybe HP may want to consider working with Omega, right? Then you put Omega here, so maybe there'll be a long queue. But jokes aside, qualitatively, I just don't find that a HP product has something fantastic. That when I buy something HP, right, I'm so proud to carry around and then show off. Don't have. So I just felt qualitatively there are cons. But the interesting thing is, if we look at the numbers, they are the second largest PC vendor. Their revenue is going up, their profit is going up. So things are going fine, even though our perception is not so good. So it's quite a very strange mixture, right? As compared to Apple, right? Yeah, Apple's perception is good, everything is good, the number looks good. But HP, these two things don't align. Yeah, but again, the numbers looks good. And of course, the complaint don't sound very good, right? Now, so let me just move on, right? So now the thing is, if we want to jump inside Buffett's head and we wanted to understand, HP is not Apple. It's not distinctly different. It's not a special unique brand. The things that they are selling, right, is a commodity. The balance sheet don't have extremely huge amount of cash. The numbers in terms of profit, ROE, ROA, yeah, there's a slight uptrend, right? But a lot of companies also uptrend. So now, why is Buffett buying HP? Yeah. Now, he didn't really specifically say why he buy HP, but we're trying to guess, right? Now, if you look at this slide, this is Warren Buffett's latest letter to shareholder. Okay, latest letter to shareholder, right? And here it says that Buffett's balance sheet has 144 billion. So 144 billion is 144, right? With 9 zeros at the back. Yeah, in short, it's a lot of money, right? So I'm just guessing, is it Buffett got so much cash that he has nothing to do, right? That he just want to find one big elephant to shoot. Yeah, to use that some of the cash. I'm just guessing. Yeah, just guessing, right? So perhaps by spending some of the money, right, he would rather make a bit of money by spending rather than keeping it as cash. Yeah, and one more thing, with this 144 billion, right, Warren Buffett has a constraint as compared to us because he cannot invest in small companies. He has to find big companies. And if he has to find big companies, and then yet you want to find something that meets his criteria, right, long-term holding, in reality, there isn't really much company for him to choose. Which is why if you look at the transaction, right, that he do every quarter or sometimes every 6 months, he hardly do anything. Yeah, because he's just waiting, and then for something to invest. So perhaps HP just come along, okay, so undervalue, a big company, then maybe I got 144 billion, let me just use 4 billion to shoot, which is like 1%, right, of his entire portfolio. So this is what I'm guessing. Because so far, I just don't feel that there's something unique about HP. But it's okay, right? It's okay. But what if, right, for you look at it, maybe HP, okay, so, but you want to find something more, right? Before we talk about something more, I just need my teammate to play a very short video. But before he play a short video, let me share with you the context, right? Now, the context is this video was being shot last year, December, when we are hosting our first value investing symposium online. Yeah, where we talk about different companies. One of the companies I remember we talked about is 𝗛𝗲𝗄𝗏, right? So we wanted companies with very strong moat like 𝗛𝗏𝗄𝗏. Yeah, so out of the two, right, assuming both are undervalued, 𝗛𝗏𝗄𝗏 and HP, I think I'd rather choose 𝗛𝗏𝗄𝗏 than HP. Yeah, this is just my opinion, not fact, opinion and fact, right? So after the symposium, we interviewed some of our guests who were invited there. They were there to watch the entire session. And I just want you to watch this, I think, inspiring video where they shared their thoughts about their journey about investing. Other than HP, there are actually a lot of other things we can look out for. Yeah, but let's watch this video first, and then I'll continue.
The number one obstacle that will prevent me from investing is my bad past experience I was scammed before, so I really am traumatized about it.
I'm more concerned about the losses that I may incur without proper knowledge.
So some of my friends and family has actually lost a lot of money in investments, and that was probably like the biggest obstacle that I have to overcome in order to make my first move into putting real money into an investment.
To be honest, I made some errors in the past in stock investment as well. I just put in money without knowing. After attending the VIA course, that was the most important turning point for stocks. Yeah, after that, the portfolio just went up and up.
I decided to source for a reliable training, and I found VIA. I took up the course and I learned that, okay, there is another side of investing, that we can do this very rationally.
I remember I did not fully comprehend the concept then. In the end, I attended VIA because Cayden's life experiences and achievements were convincing.
Wow, investing has improved my life, especially the unusual strategy, the cash flow option strategy that Cayden taught us. And plus, we know how to scan and screen for good and cheap companies. So I've been earning premium since last year, so it's been 1.5 years. So I have very regular passive income, and it really improved my life because I have a hope of an early retirement and giving more to my family.
So investing has definitely changed and improved my life by giving me back my time freedom. So a lot of people think that investment is about money, making money, but no, it's actually not. It's about what money can do for you, and the number one thing that it has helped me is that it has brought me back my time freedom. So right now I'm semi-retired. I get to spend a lot of time with my family, kids, and friends as well. And of course, I can go travel anytime I like because I don't have to worry about my finances.
By investing in right companies or stocks or whatever, I give a better chance to myself, my family, my children, a better starting line. You know, in the future, they have more resources, they can do whatever they want to do.
I think what really pulled me to VIA was Cayden.
Cayden,
I attended his masterclass, I heard him speak, and I've heard other speakers speak for their own masterclasses. And Cayden's humility and honesty was obvious, that this guy is not out there to get you to sign up. He's just there to show what he knows and let you learn about investing his way. So I found his honesty really, really enticing.
well, I've heard other value investing presentations so far, and I found that Cayden to be very sincere, knowledgeable, and I believe that he is teaching in a way where it is through his honest opinion and experience. So I think that is very useful coming from somebody who's you are trying to learn from. That's why I decided to go with Cayden and VIA.
If you want to be financially free, learn from people who have the means. If you want to be rich, learn from the rich. Only those people can teach you these things. So I came to VIA searching for a mentor, and I think Cayden is actually quite a perfect one because he gave us a mindset, and that was the most precious thing, a habit that he gave us for investing.
So in terms of investment results, in terms of ROI, is about 10 to 15% per annum.
1.5 years, I doubled my savings.
I have been investing for 3 years now, and proud to say that one of the stocks that I own is now a two-bagger. And a two-bagger means it has gained 200%, so I'm quite proud of that.
Since I started in October, November period, and by now it's about almost a year already, and I got about 29% of ROI, and I think that's fantastic considering the fixed deposit interest in Singapore. Thank you.
Okay, ladies and gentlemen, welcome back. Yeah? So just hang on there, right? Now, by the way, just to let you know that there are still quite some ways that you can squeeze money out of HP, right? And in the next couple of minutes, I'm going to share with you, but you should be looking at a slide right now, you know, where I talk about Berkshire's cash, Berkshire cash. And if you have watched the short clip just now, some of our grads like Ali, Brad, Carol, they all talks about the importance of overcoming certain obstacles in investing. Now, just to let you know that we have about 158 people who are watching this. Now, I'm just guessing, most of you are graduates, but just in case you have friends or you yourself, you have not attended any of our classes, right? Yeah, just to let you know that upcoming 2 weeks, 1 week or 2 weeks, right? on the 17th of May, which is a Tuesday, 7 p.m. to 10 p.m., as well as 26th of May, a Thursday, right, 7 p.m. to 10 p.m., we are running a 3 hours masterclass specifically for those who have not attended our training, you have never invested before, or you may have some bad experience losing money and so on. And then, you know, you're just sick and tired of guessing share price, using technical analysis and so on. So during this evening, let me share with you some of the things that we're going to cover, right? But just to let you know, for the past 2 years, we have been charging $8 for our masterclass to make sure that people appreciate what we do, because for the 3 hours masterclass, we are really teaching, right? It's a subset of our entire 4 days class. So I think just for me alone, since the government has opened up, right, with not much restriction in terms of people coming to seminars and so on, we decided to scrape away these $8. Previously, even we have collected every single cent goes to National Cancer Center of Singapore. So just for May alone, we are scraping this $8, which means that right now open up, right, we are also opening up our class so that more people can benefit from what we do and know who VIA really is. Now, and without paying a single cent, which is entire complimentary, right? At the end of this 3-hour masterclass, in return for your 3 hours of precious time, right, we're going to give 2 very important things to you. The first thing is we're going to give you a copy of our national bestseller, which is called 𝗛𝗲𝘗, and right now it's retailing at Kinokuniya for $33 per copy. So this is a hard copy. This is not an ebook, right? At the same time, we also want you to, you know, while you're reading a book, we also want you to enjoy a cup of coffee. So at the end of the masterclass, we are also going to pass you 1 prepaid Starbucks gift card, right? And inside there's a stored value at $10. Yeah, which means just by learning, you're investing 3 hours of your time, we are going to give you a return on investment of $43 worth of books as well as a Starbucks gift card. And of course, learning is priceless. You cannot put a price tag to learning. But in addition, we also want to encourage you, right, to bring your friends. Remember, right, based on the video they watched in the early days, they said that, oh, I lost money and so on. So we don't want you and your friends and families to lose money. So we want to encourage you, right, to bring them along. So in case, right, you want to bring 1 or maximum 2 friends along. So again, it's complimentary, right? You don't have to pay $8. At the end of the class, other than this book, other than the $10 Starbucks gift card over here, right, we also pass you a $20 worth of NTUC voucher. Yeah, because you help us by bringing your friends. And then your friend who came with you, right, they will get what you receive. Of course, without the $20 NTUC voucher. So in other words, you have 3 things: the book, Starbucks gift card, $20 voucher, and your friend has the book and the Starbucks gift card. So I think it's a win for you. It's a win for us because through giving out things that are priceless, we also gain your trust. And then at the same time, right, you also learn something. Yeah. So let me share with you what you learn, right, which is the priceless training. So on either of these days, either the 17th of May or 26th of May, you learn 3 very important things. The first thing is you learn how to generate 3 sources of passive income, even if you know absolutely nothing about investing. Now, later on, right, I'm going to share with you the 3rd source, because if you buy HP, right, most of the people know about capital gain. You try to buy when it's cheap and then sell when it's expensive. And then the other one is to make money from dividend, which is about the 2.2+% dividend yield. But there is actually a 3rd source, and I'm going to share later on. So 3 sources of passive income you and your friends and family is going to learn. At the same time, of course, you will learn how to invest in minimal capital. Minimum, I think, is a few $100, right? And the last one is the one that I'm going to demonstrate later on. Is you practically, right, by using a method called cash flow option strategy, you can literally bring cash on a weekly basis or on a monthly basis. And this right, will take place on the 17th of May or on the 26th of May. Now, 2 links have already been posted in the live chat, right? You can do a refresh so the link pops up. So remember, there's 0 risk on your side. You just need to register, bring your friends along. You receive something, your friend receives something. And then for you, of course, an extra $20 NTUC voucher. So remember, 17th of May, 26th of May, just for this month, we are going to waive off the $8 ticket fee, right? So they can use the money to watch Doctor Strange. Okay. At the same time, you receive a hard copy of 𝗛𝗲𝘗 book, a $10 Starbucks gift card. Yep. So that's a worth of $43, right? And of course, if you bring your friend, you have an extra $20 NTUC voucher, and your friends will receive what you have received, which is the book and the card. Okay, so it's a win for everybody, right? So the link is over there. So in case you cannot see, you can just refresh this YouTube again. The link is over there. Just click and then register. So what is going to happen is one day when you go to Starbucks, you present your card, you get a cup of coffee, a small one with maybe a small slice of cake. So at least you remember us, or remember us, right? So this is a very good opportunity for you to learn something and then also receive something in return, right? So what is going to happen is we're going to take a very short registration break, so that in case you're not our grad, it's an opportunity for you to click on the link very quickly. Yeah, just register and that's about it. And after the break, I'm going to share with you, right, how you can squeeze some money out of HP regularly. So there are two things I'm going to share after the registration break. The first thing is I'm going to talk about the comparative analysis. So remember, right, the first one is Lenovo, right, largest market share. The second one is HP. Yeah, so what I'm going to do is I'll go through all the 5 companies and see if HP is so-so, let's say so-so, right? Are there any other PC companies that you can invest? Yeah, so I'll do a comparative analysis. So in other words, after the break, not only you know one company, right, you will know in addition of 4 more companies, so total of 5. For 5. So that'll be the first thing, comparative analysis. And then after that, right, I'll talk about how we can sell options to squeeze regular income out of HP. But that will only happen after these 10 minutes registration break. So remember, the 2 links are over there. And if you are not our grad, please click on the link, register, and I shall see you after 10 minutes. So let the breaks begin. Okay, welcome back. So back to this slide. Buffett bought tech stock, which is HP, right? A consumer electronic stock. So should you also buy HP? So remember just now I made a promise that I want to show you the remaining metrics of the other companies. So let's take a look at this slide. This is a slide that I've shown you just now where HP is the second largest PC vendor, right? And these are the remaining competitive company. So what I did was I put all these companies side by side. There are only 5. Yeah, because there is this others, right, which only take up 20%. Yeah, so these are the killers. These are the killers. So all these are the giants trying to fight each other, right? So let's look at all these companies, put them side by side. And if you don't like HP, are there any other companies that you can look at? No, so let me share with you the metrics from the angle of value investing. Now, Warren Buffett has always wanted to invest in a company with a durable competitive advantage. And sometimes it is also known as an economic moat. And so how do we know, right, quantitatively that a company has economic moat? So what you want is you want to look at this term called ROIC, which stands for return on invested capital, which means that if they put a capital in, right, they put $10 in, what's the return that they got it back? Yeah. So of course, the larger the number. When they say larger, right, preferably more than 15%. If it's more than 50%, it's actually pretty good. So if you look at all these numbers, these 3, right, are above 15. Yeah, but looking at this ROIC number in isolation is not good enough. Why? Because you want to compare with another metric which is called WACC, weighted average cost of capital. Wow, sounds very technical, right? Now, in short, in order for the company to grow, most companies, they will borrow money. So when they borrow money, which is the capital, right? Let me write this down. They borrow money, which is a capital, right? There is a cost to this capital. That's why there's a cost of capital. Yeah, so of course, a cost of capital, you want it to be as little, as low as you can. So in other words, preferably this is high and preferably this is low. So that when this minus this, right, there is a positive number. So if you look at the TTM, which is the trailing 12-month ROC, versus the trailing 12-month WACC, right, you realize that this is a positive number. The bigger, the better. So far, right, if I can pick 2 large double-digit numbers, will be HP here and then Apple. Yeah, Dell cannot make it. No, see Dell, Lenovo. Yeah, also cannot make it. So Lenovo sells the most things, but the numbers don't. It's not so good, It's not so good, right? So it doesn't mean that you sell more things is good, Now, then of course you want to look at growth, right? Why? Because only when a company's earnings per share grow, then the share price will grow. Yeah. So you can see HP at least for the past 3 years, not bad, 17%. Wow. Acer 52%, and Apple 23%. So all these 3 here are really good. Now 0 here, that means no growth. So in other words, Dell I think cannot make it. Lenovo also cannot make it. Cannot make it, right? Now then you look at the net margin. So what's net margin, right? Here is 10%. It simply means that for every $100 worth of PC or whatsoever that they sell, right, minus whatever, minus all the expenses, $10 is left. $100, they make $10. So you can see here, right, for Apple, every $100 they make $26. Yeah, it's quite obvious, because people queue for Apple. This one got no queue. This one no queue, right? The rest worse, the rest. Lenovo, $100 make $2. Wow, this one, want to buy chicken rice also cannot. Okay, so this is quite pathetic. So what I did was I gave some points to it. So for example, €3 sell 3 point, €1 sell 1 point. So you have 313. So far, right, in terms of these 3 categories, HP and Apple seems to be the best among the rest. So let's look at other things. Let's look at this efficiency, whether are the companies efficient in making money. Now HP here is 0. Remember just now the equity, right, as explained by Hillary, was negative. So this is not so applicable. Not so applicable, right? So let's say they fail. Let's say they fail. Now here ROA, we want more than 7% is a pass. More than 7% is a pass. And here we want it to be more than 15, right? Wow, here all pass. Here all pass, right? Yeah. So then the debt. Obviously, we don't want a company to have high debt, which means that the smaller the number, the better it is. All this you realize that it's less than 1. Less than 1. All this is more than 1. Not so good. Not so good, right? So if I give points, right? 2 yellow sell 2 points, and then 3 yellow sell 3 points. And if I add all these points on top to the points here, right, I'll end up with like a subtotal. Yeah. So again, at this point, right, the conclusion is if you look at these 5 companies, HP, right, and Apple still are the forerunners. Yeah, beating the rest to it. Now, so from the angle of value investing, we always want to find a good company and buy at a cheap price. Yeah, cheap price. So let's look at the valuation criteria. But here we talk about relative. Yeah, A as compared to B, B as compared to C, right? Now, all these numbers over here, right, regardless of the technical explanation, the smaller, the better. The smaller, the better. The smaller, the cheaper the company is. Yeah, so you look at all these PE ratio, smallest, right? Here, smallest, and then here, really small. So again, one yellow cell, right? Here there are 2 yellow cells, so 2 points, 2 points, 2 points, 2 points. So let me just draw a conclusion, right? The conclusion is out of all these competitive companies, 2 companies stand out. One is HP. Now remember, before the break, I have a personal bias, right? The personal bias is, I won't go and sleep overnight to buy HP lah. Apple maybe. So 2 company pops out. But out of these 2, of course, Apple seems to be more superior than HP. Yeah, which was why Warren Buffett bought Apple. By the way, just to let you know that out of Warren Buffett's 100% portfolio, right, about 40+% is Apple. Yeah, so perhaps this is the reason why, because Apple is the best of the best among all these competitors. So I think HP is not the best, but it's the second best. Second best, right? So you had this champion number 1, right, and then you have this HP number 2. Okay, so that is in terms of the company whether good or not relative to the rest. And then if you look at the cheap, right, both HP and Apple, right, appears to be cheap, yeah, as compared to the rest. Yeah. So which means that if I only buy one company just by looking at this and just by listening to Hillary's presentation, right, if I can only buy one company, I think Apple has to come first. Remember, this opinion, this is not a fact. And remember the disclaimer, I already read it. Okay, you forgot, right? Please scroll down, stare at it for 10 seconds, and then come back here. So out of the 2, if I choose, I think I'll prefer to choose Apple first. Yeah. So if Apple don't exist, maybe I'll go for HP. So number 1 is Apple, and bottom is HP. Now, but remember, right, the valuation here, they are relative. In other words, they don't tell you when is the entry point. Okay? So let's look at the entry point, the exact entry point, right? From a Morningstar perspective, they felt that the intrinsic value is 29. And then right now, share price is about 37, so it's slightly overvalued. That is from Morningstar's analysis. Now, then here, right, this is Mark Cash, senior equity analyst. Oh, HP shares saw, but we are cautious about demand peak. This is quite generic, quite generic. And be very careful about equity analysts or that analysts, right? Because usually they don't buy the stock that they recommend. So you have to be quite careful. So let's come back to here. So here Morningstar is a overvalue, right? Yeah. Warren Buffett is about $35, 34.9. So that is his entry price. Morningstar is 29, right? And what I did was early this morning, I also did some calculation. Okay, my calculation, conservatively, for the intrinsic value of HP is actually about $34. $34, and these are my assumptions. Yeah, HP don't really grow very fast, so I'm really quite skeptical, right? Skeptical about Buffett buying this stock. Yeah, so I suspect he got no other things to do. Then he go and buy some of this. Serious, And then 2% terminal growth, 10% discounted rate, 30% margin of safety. So now, if I may summarize, right, the range is about 29 to 37, 29 to 7. So 29 is really super conservative, And so let's play a game. Every time when we do this deep dive, I also want to hear your take, right? If you look at the slide right now, you can see basket A, basket B, basket C, right? Now remember, this is like a framework that I personally use. Every time I do all my homework until the end, I have to ask myself, right? Which category, which basket does this HP fall into? So I need your help. You can either choose A. You felt that A, HP is a low risk, high return. Yeah, you can choose B, high risk, high return. Yeah, but Buffett's opinion is A lah. But you don't have to follow Buffett. Buffett also made a mistake, right? He bought airline and after that made a mistake. So you have to be very careful. And then basket C, right, is high risk, low return. Yeah. So I'm going to give you 5 seconds, right? Can you type in the chat box? Which one would you prefer to choose? A, B, or C? But that's not the end. Later we talk about squeezing money, right? Out of HP. Yeah. So just hang on. put up poll already. Yeah, so right now, instead of typing, there is a poll, right? Yeah, so you put up the poll. Yeah, if a poll pops up in which I cannot see, right, you just choose either A, B, and C. Now for Zoom, there's a poll. I didn't know YouTube also have a poll. Yeah, poll, right? Okay. Don't worry, we can still make money out of not Apple, right? You see, unconsciously, I want to say Apple. It's actually HP, yeah. Yeah. So how's the poll coming? C 50%. Yeah. So I'm going to write down the result on the poll. I'm not very sure the audience cannot see, right? Yeah. Can the audience see the poll? Yeah. Where is it? Oh, okay. So A is about 47%. B is about 12, right? And then C is about 41. Oh, interesting, huh? Okay, good. Maybe you can end the poll and then so that the audience can see, right? Okay, very good. Interesting, huh? So in other words, most of you, right, don't think that it's B lah. So it's either this and this, which means that there are two extreme, you know. Yeah, the audience here got two extreme, right? Now, I'm going to show you a solution, right? Now, for those people who have selected C, in the next couple of seconds, right, I'm going to share how you can move your choice from C, which is high risk, to A, right? Now, if you felt that the risk is high, because the share price right now is overvalued and so on, right? So what we can do is what if, the poll, the result is already there. Yeah, what if, Jason said the audience can see, what if you can lower your risk, so that your basket of selection can go from C, right, to A. Okay, ready? Ready, huh? Now, if you are our, Wendy, thanks. If you are our VIA grad, this screenshot will be very familiar. Yeah, screenshot of this is very familiar, right? Okay, good, thanks. Now, this is a screenshot of one of my live TD and metric account, and I put HPQ here. Remember, it's not HPE, right? That's the enterprise, Okay, so the share price this afternoon is about closing is about 38. So let me just write here 38, right? And in case for some of you, you feel that 38 is high risk, the price is a bit high, right? You want to have a low risk. Low risk, the price has to be low, So how can you buy the stock at the price that you want, which is the low price that you want, and then while waiting, right, you get paid for it. Now, for those people who are our grad, you will learn how to sell options, right, via the strategy called CFOS or cash flow option strategy. Now, let's say we choose 32. And if you choose 32, what it simply means is that if you felt that you want to buy at 32, not at 38, which also means that 38, right, has to fall about 8% before it reaches 32. And the lower you buy, right, the lower the risk. Yeah. So if you really want a low risk, high return, a low risk, high return, right, what you can do is you can sell one type of options called a put option, selling put option, by choosing the strike price 32. But of course, if you can choose 31 and so on. Now, if you choose 32, what does it mean, right? Is we take this 32, we put it over here. The premium that we get is 0.37, we put it over here, right? So 0.37 divided by 32 times 100. In fact, right, you will get paid 1.16% per month, 30 days over here, right? Yeah, per month while waiting for the share price to drop from 38 to 32. Yeah. Now, bearing in mind that this is 0.37 is one price, and then the other one is 0.50. Yeah. So in fact, in real life, you can choose, let's say, a 0.45, and if the order is not filled, you can choose 0.4. Yeah. So there's a possibility that you may be able to make more than 1.16% while waiting for the share price to drop. And if you buy HP at 32, then your risk will be much lower, right, as compared to if you buy the stock at 38. Now, which also means that if you manage to buy the stock at 32, Buffett's share price, just to let you know, Buffett's share price is 34.9, right? And if you are able to buy at 32, that means you are $2.90 smarter than Buffett. Okay, and then meanwhile, you get paid about 1.2%, right? 1.2% times 12 is almost 14% per year. So in other words, now if you are a graduate, you will know what I'm talking about. If you are not a graduate, I want you to imagine you are able to make maybe 14% or annualized per year without owning HP stock. And if you do eventually own a HP stock, you're buying at a price which is $32 and it's $2.90 cheaper than Buffett's $34.90. Okay, Now, so for our grad, because right now it's still early, right? The market will only open at 9:30. Right now it's 10:11. So I'm not going to wait until 9:30 because 𝗛𝗲𝘄𝗹𝗶 want to watch Doctor Strange already. So I better don't hold him. He cannot take it already. He still want to eat supper, right? Because Hari Raya and so on. Right? Now, so what I'm going to do is now in case you're not our graduate and then you wanted to know what I'm talking about, right? How can anyone make 14% without owning the stock? Now remember, there's an upcoming on-site masterclass. I'll just need our team member to post the 2 link again, right? It's going to take place on the 17th of May, 26th of May. And then for the past 2 years, we have been charging $8, so the $8 can be given to charity, but we're going to waive in May, right? Since the government has opened up. And after the masterclass, you appear. After the masterclass, you will receive 1 hard copy book, which is $33. We will also treat you to a cup of coffee by giving you a $10 prepaid Starbucks gift card. So that is $43 worth of gift, right? Yeah, in exchange for your precious time. Yeah, and you also learn something. And at the same time, if you bring friends, maximum is 2 lah. You can bring 1 or 2, right? Whether you bring 1, whether you bring 2, right? At the end of the session, we also pass you $20 or NTUC voucher. And remember, right, your friend will also receive a copy of the book and the gift card. So it's a win for everybody. And during the masterclass, you will learn how to generate 3 sources of passive income: capital gain, dividend, as well as selling options. But we'll go into detail how it works. Even though you know absolutely nothing about investing, of course, you'll learn how to invest with a few $100 minimum capital. And this is the interesting part. This is the CFOS that most of our grads watching this would know. Yeah. So with this, right, this is my last slide. By the way, the YouTube video will still be here. So if you want to share this video with anyone that you know, so that you know the proper way, or your friends know the proper way of investing, going through a framework, a structure to analyze business, please feel free to share this video. Oh, by the way, there's a like button, right? Can you just help us to press like, so that our ego get lifted, right? Okay, get lifted, So we're going to end the session, serious. I think 𝗛𝗲𝘄𝗹𝗶 really need to see Dr. Strange already, So just to let you know that we are VIA. There are other companies who want VI something, right? But we are VIA. We have been around for the past 12 years. And VIA stands for a Value Investing Academy. And by doing such a series of deep dive, right, into different companies, it's just to share with you, we actually care to make you a better investor. Now, before I end the session, just to let you know that the next deep dive, right, is going to be very, very exciting. Yeah, because we're going to talk about this company called Twitter. Twitter. And of course, most of you should know, right, Elon Musk has bought a huge stake, right, of Twitter, and there's some rumor, I'm not very sure, has it came true, that he want to buy the entire Twitter. Yeah, so that's one exciting thing that we're going to talk about Twitter, right? So before he performed the transaction or finished the transaction, should you buy Twitter? Yeah, so that Elon Musk buy the shares from you. Okay, so this is the first thing that we're going to talk about. And the next deep dive on the same day, we also talk about the second company. I'm not very sure whether you heard before this so-called investor called Cathie Wood. Cathie Wood, right? Wow, so she liked to hum-tum all those so-called disruptive company. And I think a couple of months ago, she added her stake, right, into this company called Teladoc. Yeah, so the more she add, the lower the share price go. Okay, and then she said that, I have full faith in this Teladoc. So now the thing is, if Cathie Wood throw in millions of dollars into this company, should you throw in money? Yeah, so the next session will be quite interesting because we talk about all this hot stock, Twitter and Teladoc. So remember, we are VIA, Value Investing Academy, and I shall see all of you in our deep dive series. Okay, so have a good evening, and we are going to watch Doctor Strange. Okay, goodbye. See you soon.